How did a middle-class kid with a poker face become the most feared hedge fund manager on Wall Street, survive the biggest insider trading crackdown, and end up owning the New York Mets? I'm Sean, and today we're decoding Steve Cohen, the hedge fund king who bought the Mets. Let's get into it. In the world of hedge funds, few names inspire as much awe and fear as Steve Cohen. His firm, SAC Capital, was a money-making machine, averaging annual returns of over 30% for 2 decades. But behind the billions, federal investigators were circling, suspecting that Cohen's edge came from illegal information. Steve Cohen grew up in a middle-class family on Long Island. He discovered poker in college and became a skilled player, learning to read opponents and calculate odds. After graduating, he joined Gruntle & Co., where his aggressive trading style earned him the nickname, the King of the Tape. In 1992, he founded SAC Capital with a focus on short-term trades, often holding stocks for just days or hours. His returns were staggering, and soon he was managing billions. By the mid-2000s, SAC Capital was the envy of Wall Street. Cohen was known as a tape reader, someone who could spot patterns in stock prices and trade with uncanny precision. But some former employees alleged that this success was fueled by a culture of information gathering that crossed ethical lines. They claimed Cohen encouraged traders to get an edge by any means necessary, though Cohen himself was never charged. The FBI and SEC began investigating SAC Capital in the late 2000s. In 2012, former portfolio manager Matthew Martoma was arrested for insider trading related to an Alzheimer's drug trial. Another employee, Michael Steinberg, was also convicted. Prosecutors alleged that Cohen had received tips and even had a red flag system to avoid detection. In a dramatic deposition, Cohen denied any wrongdoing, but the evidence mounted. The government was determined to bring down the hedge fund king. In 2013, SAC Capital pleaded guilty to insider trading and agreed to pay a record $1.8 billion in fines. Cohen himself was not criminally charged, but the SEC banned him from managing outside money for 2 years. He was forced to return billions to investors and convert SAC into a family office, Point72 Asset Management. It was a stunning fall for a man who had once been untouchable. But Cohen's story didn't end there. After the ban lifted, Point72 continued to grow, and Cohen's personal wealth soared. In 2020, he bought the New York Mets for $2.4 billion, fulfilling a childhood dream. He also became known for his massive art collection, including works by Picasso and Warhol. And in 2021, his firm was reportedly involved in the GameStop short squeeze, showing that Cohen still had a hand in market-moving events. Steve Cohen's journey from poker prodigy to hedge fund king to Mets owner raises uncomfortable questions about accountability on Wall Street. Critics argue that the $1.8 billion fine was just a cost of doing business for a man worth billions. As Cohen enjoys his new role in the spotlight, the debate continues. Did justice prevail, or is some wealth simply too big to fail? If you enjoyed this story, subscribe for more deep dives into the people and money shaping our world. See you in the next one!